Hey, what's going on, guys? This is Jaguar, and this is my playbook trade for January 13th of 2020. And the trade I want to discuss with you guys today is a trade that I haven't taken a whole bunch of live examples of yet, but I've been kind of watching this trade play out, and I started to get involved recently, and I actually have a 100% win rate on this trade of my live examples that I've taken. So I think it's a pretty good little trade, and something that you can easily manage your risk on as well, or at least in the way that I trade it. I feel like it's a pretty easy trade to execute, actually. So if you could tell by these boxes that I have, right here, this is a buy the close, breakout slash rally type of trade. So what I'm looking at in this trade really to begin with is the context of the day type. So you could see today was a pretty one-sided market. I mean, obviously in the morning we had, on the open, we had some indecision here, and buyers and sellers went back and forth. Buyers took it up. There was a pullback from 10 o'clock to 10:25. But then beyond that, the rest of the morning session was completely one-sided. There was no major pullbacks. And then we had consolidation for the remainder of the day. So pretty much by noon, I knew that this would be a day type that I would consider looking for a buy the close type of trade when we got to the close. So it's really based in context. Now, another example of a day type that I would consider buying the close on would be, let's say we had a very broad initial balance range. And then, so let's say the IB was from 68 to 82. And then we pulled back and we were just hanging around VWAP for the remainder of the day. And then all of a sudden at the end of the day, we were breaking out from the IB high. I would also buy the close on that type of day. And there's an example a little bit further back here that I'll show you guys that one as well. Normally, I'm going to show you guys on these playbook trades. Normally, I'm going to show you me executing the trade, and I'll show the footprint, and you can see right where I got in at. On this trade in particular, I wanted to explain the context of this trade and how it works. So that's why I'm using the 5-minute chart here as an example. But I don't actually execute off the 5-minute chart, so I just wanted to be clear about that. So anyways, the high a day here was 85.25, and you could see the 345 candle. I'm not sure if I said that already, but I'm not looking to get in prior to 345. So if it was 340, I'm not going to get in. 335, I'm not going to get in. On this particular trade, I'm only looking to get in at 345 or later. So 345 be the first candle I'm looking at. And actually this red candle right here is the 345 candle. So that would be a excellent place to get in today. So we broke that high at 85.25, and we just broke it by one tick and went to 85.50 and then pulled back here. So on this trade, I take an 8-tick stop loss. So let's just imagine that you got aggressive here and you bought the breakout as soon as it broke and you got filled at 85.50. So if you had an 8-tick stop loss, your stop loss would be at 83.50. So you can see it didn't come back and test you. It didn't come back and test your stop. You probably had to hold through 4 or 5 ticks of heat. So that's if you want to be aggressive on this trade. Now, the way I want to trade this trade is I'm looking to, when I feel like I have that trigger of I want to be in the trade, then I'm looking to get filled at a 2 or 3, maybe 4 tick retracement. So I'll put a limit order in the market. And what I'm doing is I'm looking at Bookmap, and I'm trying to get filled right in front of the nearest high liquidity area. So, let's say that I'm looking at the book and the average amount of liquidity on the book is 280. And then there's a spot, 4 ticks down that has orders of 500. So I'm going to look to get filled 3 ticks down right in front of that order. And so this time of day, and this is a little bit different than trading morning breakouts, because this time of day, the market really doesn't run away from you. I mean, I know that this candle right here, this 355 candle, this big green bar, looks like this was the dramatic part of the breakout, but that really wasn't trading that fast, and if you compare that to, like these candles on the open, and I understand that these are the same amounts of time, but by fast, I mean the velocity at which orders were going in, the velocity that the volume was being put in, and how fast price is moving across levels. So the market's really not going to run away from you in this trade. And so typically you'll have enough time to get in. So that's why I think it's pretty easy to execute, because it's not really that stressful of a trade. So your target on this trade is time-based. It's not actually a financial target. It's the end of the 405 candle. So I'm looking to hold through the cash close, and then I'm looking to hold all the way through the 405 candle. So from 4 to 405. So when I'm looking to get out of this trade, I'm looking to get out maybe at 4:04:45, 4 o'clock, 4 minutes and 45 seconds, or maybe even after that, maybe right at 405. And again, I'm going to show you some examples of why that is, but that's essentially the trade. So let's look at some other times where this has worked. So one thing I want to say, I want to stop right here and say, look at this Thursday. This had, so much two-sided action. There's no way that I'm going to trade a buy the close breakout, on this day. It's just there's nothing about this that, I mean, maybe some people could make money on this move right here. I don't know how to do that. So, that's just not the way that I trade. On this day, this was last Wednesday, I would have traded a buy the close breakout here. I actually did trade the breakout here from 62, but this was not a buy the close situation because this was too early in the day. This was 3 o'clock when this broke out. So this really was just a late afternoon breakout. So that's completely different in my opinion. So if we look here to last Monday, I already have these queued up right here. This was the 305. So I hope you can see my crosshairs pretty well. This was the 345 candle, this middle green candle right here. And so you can see this next candle at 350 was the one that broke the highs. The highs was 32, 42.25. So let's say that you got in at 32, 42.50 or something. I'm looking at the footprint and book map when I'm trading these type of trades. So this 5-minute bar is not what I execute on, so it's hard for me to say exactly where you'd get in at. So for the purposes of imagining these examples, let's just say you're getting in a tick above the prior high, like you're just aggressively buying the breakout. Although that's not the way I would actually do that. But if you got in at 42.50 and then you held through the 405 candle, so the high here was on the 405 candle. So you would have got out at 48. So you might be thinking, oh, well, you could have got 6 more ticks and got out at 49.50. I don't know how you would have known to get out at 49.50. But with the strategy that I'm talking about, I'm looking to get out as the 405 candle closes. And you see we rolled over from that point there. So 405 seems to work pretty well as far as just holding out there based on time. Here's another example on Thursday the 2nd. And this was an example of what I'm talking about, the IB having a very broad or large IB. And this is actually a neutral extreme day, which this also happens on, and comes back and breaks the highs. So you get in 51.50, 51.25, exiting at the 405 candle, which would have been the low of this red bar. So this is where it closed at, and so that would have been 58. So let's say like you got in at terrible pricing, you got in at 52, and then you get out at 58. So it's a pretty solid trade in my opinion. Here's another place where this worked. And again, this green candle right here, the candle that broke out, was at 345. So again, that's why I'm saying I'm looking for 345 or later for this to happen. Now on this particular instance, you see the wick of the 355 candle was pretty significant. You might have got shook out there, and maybe if you got bad pricing on your entry, you might have got stopped out there. But let's say again that you got in aggressively at 32.27. So your stop would have been 32.25 if you're like me and took an 8-tick stop. So your stop would have came close to being hit, but it didn't. And even at the 4 o'clock candle, this was a pretty crazy candle. But then look at the 4:05 close. It would have been at 33.50. So, excuse me. So you would have come from 27 to 33.50. So, and this again, the context here, this is the example of a day where I said this has a wide initial balance range. This was a 13-point IB, hung around VWAP, tested VWAP from the upside, tested from the downside, and then at the end of the day, we had a rally. So I'm not looking to try to pick this out and get in at this point of the rally. I'm looking for the move to already be proved to me, and then I'm looking for the breakout to occur after 3:45 p.m. So, I'm not confident this is a trade that will work, for years to come or something like that. I think this was a trade that works great in all-time high territories. And if the market entered a downtrend, then I might be trying to trade the sell the close breakouts. So this is this works because we're in an uptrend and because we're at all-time highs. So I'm not taking this trade to the opposite side. I'm not selling the close. I might be interested in some trades like that, but that's not really the trade I'm talking about right now. I'm talking about specifically a buy side trade. So I hope I'm pretty clear in that, and hopefully those examples were helpful to you guys just in discussing that. And this is a trade that I'm going to continue to look for in the upcoming days and weeks. So so I'll probably have more of these playbook trades ready to go for you guys. So best of luck to everybody, and I'll talk to you later. Bye.